What is up, YouTube? Today we are going to be talking about the crucial days ahead in Bitcoin and the rest of the market. So let's get right into this. Before we get into the amazing stuff I'm going to be talking about with Bitcoin, let's go ahead and check out the total market cap. And as you guys can see, we have gotten another green candle in the total market cap. And we are now testing this red resistance box with that green candle. The MACD is starting to curl a little bit. If we get above the 445 level right here with the daily candlesticks on the MACD, that's going to look really good. And if we get above the $144 billion level with the total market cap, that's going to look really good for the bulls as well. The support is still the same at $124 billion. And then the next support is still the same at $111 billion. If either of those fail, we're going to be pretty bearish. Specifically the $111 billion level, I would expect a new low in the total market cap if that fails. You guys, we do have a rising wedge pattern right here forming. Now, it is testing the resistance of the rising wedge currently. So if it can push above the resistance of the rising wedge and push above the resistance that it's created right here when it rejected off the $144 billion level twice, then that's going to be a strong signal for the bulls as well. If this rising wedge starts to play out and we get a support failure of the wedge, and then we get a support failure of 124 billion, I would be very careful to hold large positions in the crypto market on the short term. Friday here on the total market cap, we've got a bunch of green, which is good to see. There's a couple that are in the red, but for the most part, there's a lot of upside. And the top mover being crypto.com chain again. So let's check this one out because we did analysis on this one previously, talked about why you shouldn't FOMO into it, which I still hold true to, but let's go ahead and do some TA on this coin. So I'm still holding true to the fact that you really should not have been buying this coin, even though we were doing analysis on it kind of in this area right here. And the real reason for that is because it was starting to peak out or FOMO in its cycle. We didn't know how much higher it would potentially go or whether it was going to reject off this level, but we knew that at some point it's going to reject and start to see some downside. And I believe that point is now. This is not something that I would be loading into positions. Really, honestly, this is a big rejection, and these are huge red volume candles. So these are selling volume candles, and on the 4-hour we have a very big rejection wick on the top as well. These were rejection railroads. Now it did push higher than that level, but when you get an actual wick like this, that's a strong rejection signal for crypto.com chain. So the Elliott wave count is pretty simple. You can actually see it in the chart right here, which is just 1, 2, 3, 4, and that fifth wave right there. So an ABC correction is expected here. Now, when we looked at crypto.com chain previously, I had actually mentioned that crypto.com, or what used to be called Monaco, would likely follow behind it, and that has been holding true. This coin is up about 10% today and is pushing through this resistance, picking up in volume. So if this does go ahead and close above the $3.50 level, I'm going to expect some more upside for this coin, and it does look pretty good on the short term. Now, I do expect crypto.com chain to fall, so maybe some of that money comes into the crypto.com coin itself from that point. Either way, as you can see from a trend analysis perspective, we have a low put in right here, a higher low put in right here, another higher low put in right here, a higher high put in right here, another higher high, and another higher low pattern right here. So this is developing a strong uptrend currently. I'm also watching the altcoin total market cap because this one is actually pushing closer to the resistance currently and is a little bit ahead of the total market cap. So if this one gets above this resistance before the total market cap does, then I'm going to expect the total market cap to follow shortly behind it and push above that resistance level as well. The reason that the altcoin market is actually ahead of the rest of the market cap is because Bitcoin has been losing its dominance since the beginning of the year, and I really wouldn't be at all surprised if it continues to do so over the next few months. Right now it's at about 50% of the market, and a good target would be around 45% Bitcoin dominance. So let's talk about Bitcoin, the mothership, because we are getting very close to an extremely crucial point in Bitcoin. I've been talking about in my last few videos how we have this downtrending resistance line that Bitcoin needs to break above. That's not the only thing we're starting to get close to. We also have this horizontal resistance line. Not to mention the fact that our support levels are getting tighter and tighter. So if one of these support levels actually fails, then we're going to drop pretty quickly. So there's a lot going on right now with Bitcoin. So let me break it down for you here. So the absolute number one biggest thing to be watching is this downtrending line. And if you don't have it, go ahead and add it to your chart. Draw that downtrending line, double click on it, and add an alert so that you get an email or text message when this line is either broken above, or if it doesn't break above at all, then you just won't get an alert. This is a very, very key point for Bitcoin. If we push above this level, and especially if there's volume upon pushing above this level, I'm going to be really excited for the next couple of months, because I would suspect this horizontal level to be broken and then some new local highs here on the short term above the $5,000 level. Now, the other thing that could actually happen at this level is we get a bearish engulfing or a rejection candle. So this is a bearish engulfing. It's when the red, in my case black, candle completely engulfs the bullish candle, which is normally green, in my case white. Now, that happens at resistance levels. As you can see, we had a rejection at this resistance level. This is kind of a zone, so there's that same rejection at that resistance level there. And the same thing happened right here when we hit that downtrending resistance line. We got a huge red candle showing a rejection. Same thing right here, rejection candles. So we do not want to see a bearish engulfing rejection candle come in here. If we do, it is not going to look very good for the bulls. And we do not want to see a candle where a wick goes significantly above this resistance line either, and then closes below. So what could happen is we see price action jump very quickly up to this level, and then it just closes as a big wick below these resistance points. We don't want to see that either. What we do actually want to see is something more like this, where we get a big green candle that goes up to that resistance level and closes as a green candle, meaning that the entire day doesn't have a big wick or anything like that on the top. And then we start to come down a little bit and push up through that horizontal resistance, and then maybe finding it again as support. That would be an ideal scenario for the bulls. If this does occur again, I'm expecting $5,000 plus levels for Bitcoin. So that's the ideal scenario for the bulls. If you're a bear, the ideal scenario is something like this. Prices go up to the resistance level, you get a bearish engulfing candlestick like what we were talking about, and then you get a sideways kind of consolidation period where you can add on to your shorts, and then you get another support failure. As you can see, I have this green horizontal line also with an alert, email, and text, so I know if this level fails. And then you're testing that lower support level again, where you might get a little bit of a bounce, and then you would probably see that bounce quickly eaten up with sellers to see more downside continuation. If we get a support failure on Bitcoin, you guys, I'm going to be expecting the $2,000 range. So the biggest thing for the bulls is actually on the bigger picture, which is where we have this huge divergence where we make a low right here and a lower low right here, where the MACD is making a low right here and a higher low right here. This is on the 2-day candlesticks, on the logarithmic chart, in the very big picture. The other thing that I'm seeing is the same channel that we saw form in the last correction from 2014 till 2015, and we see a very similar channel today. So again, this downtrending resistance line is very similar to the downtrending resistance line that we're watching in the other chart. It's a little bit wider, but if either of these are breached, that's going to be a break upwards of the channel, similar to what we saw right here in Bitcoin before the next market cycle on the upside came around. A couple videos back, I actually talked about how you would make a trading plan for this based on the horizontal support and resistance, how you can create a target for the breakout and a target for the support failure. So it literally does not matter what direction the market goes, you can still be on the right side of your trade. If you're interested what video that is, it's called Bitcoin and Crypto Warning. I'll throw a link in the description. Around the 2-minute point, I start talking about how to develop targets for the upside breakout and how to develop targets for a support failure. Hey, thank you so much for tuning in today's video. I hope that you guys enjoyed it. Go ahead and comment down below if you have any questions. Check in the description box so you can follow me on social media. And I will see you guys next week for more Bitcoin and crypto updates. As always, stay profitable out there.